Hello everyone, this is Juan Sarmiento and today is Friday, May the 6th. Well, the markets have been dropping quite significantly. I think it's broke below the previous low. It seemed like it was going to bounce back, and yesterday, poof, all the gains of the day previous were evaporated, and now it seems like we're going down further. This is the Nasdaq. You can see the trend analysis that I have done here. The way it's done is you take a trend line here, go from the highest to the new lower high, and then just copy that line, and you can just duplicate, and then take this down to the next available lower low right here, the previous low, and then that gives you the trend. And presumably, according to this analysis, the market will go there before it bounces back up. Now you see the leading edge, the leading cloud of the Ichimoku cloud is really red, and that implies that we're going to go further down. Do me a favor and do this exercise for the Nasdaq, the SPY, and this is the Nasdaq again, the SPY, the ES, which is the SPY mini, and again this needs to be done on a daily chart, okay, and do the analysis like that. Okay, that gives you an idea where the target should be. Also, you could use the Fibonacci retracements or extensions, Fibonacci ratios, Fibonacci time extension, no, Fibonacci extension. This is the one. You can click on the high, click on the low here of the channel, go back up to the previous channel, to the previous high, and this could be your target. 100% will be here. That's an easy way, and somewhere here, and that gives you an idea of the timing of it. But if this gets really bad, it could go as low as 161.8. Okay, I'm not going to anticipate that. I'm just merely saying that those are Fibonacci points that usually people take them as important points. Okay, keep that in mind. This might take longer to reach that. I know this 100 is a good bet that the market will go traveling to this target and then bounce back up. Okay, but it might break below. Do the same exercise for the YM, which is the Dow Jones, on a daily chart, and do that on the ES as well, and the Nasdaq. Okay, that will give you a very good idea where we are. Okay, let's look at the market year to date, what we have done in our account. 9,000. Okay, we have recovered. At some point this account was 118,000, so that was towards the bottom of the lows of the pandemic. We made a lot of money on that, but obviously it's not eternal. These things coming back up. So this year has been very good to us. Okay, so let's look at all these trades and see if we need to change anything. We have 4 trades. I don't think I want to add anymore because right now the volatility is high. Check out a chart of the VIX, and you see that is at the high level for and it's not likely to to come much higher than that. We would have to see the low 20s before we really need to enter anything, but we can prolong this by taking our profits and reducing the risk on them. Okay, let's start with Adobe here. Let's go to the chart, analyze tab. Okay, and I see that we have May here. and these are expiring today. Okay, we can certainly roll over the put because it's well below, at 460 is well below the price, the strike price. So we would roll this over, analyze rolling. You may have difficulty doing the rollover, and we're gonna go to June 10. Let me see if I had that position, that trade. Oh yeah, good until canceled, so it's right here. All we need to do is change the price. I bid 1.23 and the high is 2.60, the mark. Obviously that's not very valid, so cancel, replace, and we're gonna put it somewhere in the middle. 96, 93, that's fine. And keep going lower until it gets filled. Then we'll come back to it. And today you can also sell another call at the same, because this call here, May 460 call, is obviously going to expire worthless, but we can certainly sell a June for whatever you're going to get. I don't know if we're going to get much money out of that. June 10th. Well, presumably we're going to get $2.12 because the volatility is so high. We can certainly sell that. Assuming, of course, that the call here is going to, oh, that's great. It did fill. This one here is going to expire worthless, so this is what my trade will look like. Not much different, okay? Let's trade this one here. Let's lower the cost even further. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I don't expect to get much, but it's a way to close the put that expires today and not. You can even leave the put there, and if you get filled, you're gonna get shares, 100 shares, and as long as you're not, well, we have here plenty of buying power, so you can buy the shares. Okay, so it won't matter much because you have plenty of long puts. Okay, but since the options are so expensive, you know, you are selling, you have those puts appreciating, the long puts. You can cancel them, you can close them. Yeah, you can certainly do that. Instead of selling the June, you can sell the July. But I want to do the June because we have still time value and the market seems to be dropping big, so we want to stay that way. Make sure that your deltas are not too big, that's all. And if this order gets filled, then yeah, your deltas will increase to the, you know, decrease because it's negative deltas. Okay, let's go to the Costco now. And we have the May call. Okay, we did fill the June, so we're gonna do exactly the same. If it gets filled, is to sell the June call. This May 600 call is going to expire worthless, obviously. Analyze closing. We're going to change this to June 10th. Yeah, it has $1. Why not? Get it for $1. This is because the volatility is so high. These calls, even though they're so out of the money, they're selling for $1. We will adjust that, I'm sure. Let's move on to, yeah, it got filled. Okay, let's move to Nike. In the case of Nike, that's fine. It's May 13th, that's next week. Okay, so it's got, what, 7 days to go? Yeah, you can do a rollover to June of both calls and puts. I wouldn't roll over the call, it's not have to do it, but the put you do have to do. Analyze rolling, and next week we'll adjust the calls. Okay, let's adjust the puts by selling the June right there. Okay, so May 13, June 10th. That gives us next to nothing, $37, 37 cents, 40. Okay, let's lock that in, confirm and send. We are rolling the put. Okay, and then Oracle. That was the Nike, filled rather quickly. What about Oracle? We want to sell a call, June expiration, and the put is working. Let's modify that. There are 6 of them, so cancel, replace, unlock, 37. Let's see if that will fill. And the call, we just sell the June call. Let's analyze here. Analyze closing. And then adjust it. It's a sell, really, and it's a June, really. And that gives us 38 cents. Also, you may want to adjust your position so that it's more towards delta neutrality. For example, here is your Oracle minus 85. Okay, and we have adjusted it, so we have the call, the put is not. So before I go to that, we need to close, make sure these positions are filled before I go adjusting anything. Let's reduce this further. Okay, I'm not too concerned about, well, how much money we're going to get. We need to close the May 22 puts, unless you want to end up with shares. That's why I'm insisting on closing them. But if you leave it alone, then on Monday you're going to find 600 shares on Oracle and 100 shares on above Adobe. That may be okay because you have plenty of cash. But I don't want to do that. In the meantime, let's work on the other two, the Costco and the Nike. Let's go Costco, analyze that. You can deselect the May because that's going to expire, and then you can see that my deltas are minus 69. Okay, so how do I modify this trade so as to neutralize my deltas? Well, you can, right here, the July put, you can roll one of them, which is the outstanding put, roll it down. Okay, analyze rolling. I'm going to demonstrate how to do that. First of all, we're going to roll only one, which means we're going to close the July 22nd 600 put. It's 90 points difference between 600 and 510 that Costco is right now. And I'm going to buy a lower strike price. 510 is fine, just in case the market keeps on going down rather nastily. Okay, and here we go, July. That gives me 65.10 times 100. That's, well, almost $6,500. Okay, let's put that to 65. Get it? So I'm lowering my put here. I'm selling one, and that way I get a lot of credit that I can use for other positions. Okay, and my short put might get assigned this 600 put here, June 20 put, but that will be $1,600 share, which I don't mind because I already made plenty of money on this stock. Okay, you can do something similar with Nike. Nike, we have the May 13 call that I said I will keep until next week. But look at my deltas, minus 122. You can certainly simply sell one of the puts or do a roll down. Let's just close one. These are the two things you create closing. Let's analyze trade. And we're just going to close one. Okay, and that reduces my deltas to 38. It was minus 21, 121, now it's 38. You can close two, and that makes your delta positive. That's not exactly what I want. One would be enough. Okay, unlock it, and that's 2205, and that neutralizes my delta, so I don't care if the stock goes up or down. And that way we are assured that we are taking our profits as we go. We don't end up with a huge bearish position and then get surprised when the market rallies unexpectedly. Okay, so that's 39. You can also roll it down. See what, if you want to do that, I would suggest only one of them right now. Close the July 135 and roll it down to 114, 115. 115. And the exact expiration, July the 15th. Oh, the Costco sold. We'll take care of that in a minute, okay? So here we are doing this, neutralizes my delta to 0, okay? So a combination of closing one and rolling one down, and I ended up with a delta close to 0. Okay, I like that, and I'm getting my profits out of the way because I don't know what would happen between now and next week when I can look at this again. If you look at the market every day, you can delay this decision a little. Okay, let's go to Costco. And now Costco, we have exactly what we want. We have deltas negatives here, 28, and we lowered the put. Okay, put was lowered. We have two calls, one of them will expire, and we have one put, 600. Okay, that's all. I'm gonna answer a phone, so I'm gonna put a pause right now. Okay, that was an interruption. I had to answer a phone call. So, all right, let's try to get this orders filled so that we can then adjust the trades for delta. Okay, so you would reduce that. I don't really care whether I'm making money. It's more like getting rid of the short that is expiring today. That's my goal here. And in the case of Adobe, look how the spread is minus 3.20. Obviously, that's not happening. So there is a lot of room here. It's very wide. That's because it's so the puts are so deep in the money. Anyway, I'm hoping that they will fill. And we did the other two were Costco. We adjusted that. Let's review that. And they have minus 27. And I lowered to the put to 510. So I got a bit of capital out of there. Nike. I'm still pending. Okay, it closed in May 13, roll it down, and I have two puts left, two put less. I rolled one down, I eliminated one. So now my delta is close to neutral. And so all I need to do is take care of the Oracle and the Adobe ones. You can see that the delta is negative. Okay, how about we sell one of these puts in order to increase my delta? Ignore the call that is expiring today. If we were to change this, let's see, if we were to succeed in doing this roll down, this rollover, what delta do we end up with? Minus 142. So we do need to neutralize those deltas. So the way I'm going to do that is by closing some of these long puts. Analyze closing trade. Obviously, we're not going to do 12 because then it turns hugely bullish. But a couple of them might do. Yeah, that neutralizes. Just doing one would neutralize a lot. Two would neutralize it completely. And okay, let's do that. And we're going to get 920. Okay. We should feel no problem. Yeah, there it is. Okay, so this is what we end up with. Our deltas are 65 positive, so you're assuming that that Oracle is going to go up from here. But in reality, it doesn't matter much, because if it continues down, volatility will continue to increase. So don't be too afraid of neutralizing those deltas. Let's go to the chart here. Chart. I need one single chart. And that's a daily. Yeah, I might find a double bottom here in rallies. It seems like that's a possibility. So still waiting for that roll down. Ultimately, we end up with shares. And the reason this doesn't fill is because it's so deep in the money. And what about Adobe? Adobe is a little more difficult because we have only one lot. Right now, the delta is negative. We have two July 15 puts at 460, and the stock is trading at 390. So we can certainly roll this down. That would give us a lot of money back and neutralize our deltas. So let's go do that. Analyze rolling. And we are going to sell one of those puts and buy one at a lower strike price. In this case, 395 might do, with the expiration, same expiration of July 15th. Just change the strike price to 395. Right there. And that turns it very slightly delta positive. Okay. If you make it like 400, you get less money, but your deltas will be more neutral. Okay, let's do that. And this might be problematic to fill as well. Okay, so you know exactly what I want to do. I will try to get this filled today. Okay, that's all for today. Thank you very much for joining me, and see you next time. Bye-bye.